Hi, welcome to this video date, which is on the 17th of November. It's Saturday. We're just going to be giving our updated outlook for Euro USD, and we're going to be going to the charts in a moment. Now, we're going to be looking at the big fundamentals and sentiment behind the chart, and also obviously the technical picture as well. Now, do keep in mind when I'm doing my analysis, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical analysis of 14 major Forex pairs, you can get live access to our member centre on the link beneath this video. Right, let's go and look at the charts. We'll start quickly with the weekly chart of Euro USD, then go to the daily chart, draw our levels of entry, stop and target. Right, on Euro USD weekly chart, just very quickly before we go and draw our levels on the daily chart. Now, I always think it's worth looking at the weekly chart. You can see the big picture, you see the wood from the trees, so to speak, and you can see the really big levels. I think that's very important in Euro USD because Euro USD is a very noisy pair, okay, in terms of there's so much speculative action in it, so you want to focus on the big levels. Right, let's have a look at how the trends develop first of all. 125, we top out into that level, break the 20-week moving average down, sideways down, briefly through the 20-week moving average, we fail, come back through it, 3 candles, body, tail, tail, find resistance at it, down we go this week. We are blue. In terms of the big trend, it's down in our view, and we're not expecting too much on the upside. Key level of resistance is going to be here, 115. Prices move up towards this level, this 20-week moving average will snake down and provide resistance, and you've got 1 body, 2 body, 3 bodies, 4 bodies there, and a candle tail rejection. Okay, so 115. I think it's going to be hard to take out this level on a close basis. I could draw a trajectory in across those tails there. Double trend line resistance. So 115, big level on the upside if we get there. Where's the key level of support? Key level of support is here. 113. Okay, so came up, 1 body, 2 body, a tail, try and get through, can't, small red, big blue through, and off to the upside. Now, in terms of this tail here, found support and bounced, get below, false breakout, we bounce back. Okay, now in terms of those levels, we'll be keeping them in mind obviously on the daily chart. Now, where could we go to on the downside? Well, these levels here are really from sentiment, which I'll discuss in a moment behind the chart. Okay, so 108 would be my first level if we break that, and then I think we're going back to 104. Okay, so a long way to go on the downside if our view is correct. For me, the weekly chart is bearish. Okay, this week we've got a kind of bullish blue candle, but in the big picture I see the trend as bearish. Right, let's go and look at the technicals on the daily chart and draw levels, and also look at the sentiment behind Euro USD. Right, on the chart of Euro USD daily, I'll just draw my levels of entry, stop and target in a moment. In terms of selling a rally, if we go higher, or selling a break lower, obviously, as you gather from the weekly chart, very bearish of the euro longer term. Yeah, the big trend for us is down. Okay, now in terms of why we're so bearish of the euro, it's to do with the fundamentals and sentiment, which I'm going to just review very quickly. Obviously, this will be reflected in the chart longer term. Now, in terms of the media, economists, banks, brokerage reports and so forth, pretty bullish about the euro going forward. And one of the main reasons they're so bullish is EU stimulus is coming to an end. The ECB obviously been printing money for years. They're going to end it in December. Now, the media says, well, you see this quoted pretty often, stimulus was responsible for 12% of the 20% of the euro's depreciation between 2014 and 2016. That's well over half, okay? So with stimulus gone, then you should see a big percentage rise in the euro. That argument is totally flawed. Why? Because the ECB printed all that money, it remains in the system, okay? That means their balance sheet is going up against the Fed's. Why is it going up against the Fed's? Well, yeah, basically the Federal Reserve, after they finished stimulus, obviously they started to reduce the balance sheet monthly, which they're continuing to do. They're taking dollars out of circulation. So that, for us, is not bullish at all. It's bearish, okay? Now, in terms of another reason the market is upbeat about euro, or the euro, is rate rises. The ECB recently warned, last week in fact, they may stay on hold for longer than the summer of 2019, where they initially said they could raise rates. The market is pretty optimistic that date, despite the ECB warning, is going to be when they do start raising rates. And yes, some economists I've seen have said they'll have to raise rates before. They won't, because of the state of the Eurozone economy, which I'll come to in a moment. But the US has a clear yield advantage, very important, and that will widen. Even if they did raise rates in summer 2019, the Fed are going to hike in December, and they're going to hike probably again early in the new year. So it's going to widen the interest rate differential. So for us, that's very important. Eurozone economy. Now, they've warned they may not stay on hold in terms of rates, the ECB, longer than summer 2019. That's to do with the economy. They're pretty upbeat about the economy, their last meeting. But there's no reason to be upbeat at all. The Eurozone economy is doing badly, and you can see it in the data. I did this in my last video. EU GDP last quarter 0.6%, but look at the forecast, 1.8% from economists. It was only a third of that. That shows you how optimistic the economists and so forth are about Eurozone, just getting their forecasts wrong. And you can look at any data you want coming out of the Eurozone, they keep being too optimistic. Economy is slowing up fast, Germany is slowing up fast, unemployment is high. Now you hear a lot about how unemployment is coming down, and there's going to be labour shortage, all this sort of stuff from Eurozone. It's not because it's so bad before. Unemployment way too high, inflation not going anywhere. Eurozone economy in bad shape. Political problems in Italy. I'm sure you've seen them in the media. Brussels clashing with Italy over their budget deficit. It could become a crisis. It hasn't yet. If Italian borrowing costs go up, then you'll see real nervousness in the market. Okay, if confidence goes in Italy, if Italy gets really confrontational with Brussels, if borrowing costs spike, Italy has got so much debt, the banking sector is in such bad shape, the ECB will probably have to do something. If it goes to a crisis, it'll be way worse than Greece, okay, which we had a few years ago. This hasn't really come into play yet. These 3 points here make me euro bearish. This one here would just basically reinforce the bearish view, help the euro get down a little bit quicker, or a lot quicker. Media bearish fundamental for the USD. Media are on about the economy is peaking, okay? Fed interest rates, they're going to have to slow up. Why? Because Donald Trump can't stimulate the economy going forward, because the Dems have one of the houses and they will try and control him. That's true, okay? However, that was never in the equation anyway. It wasn't discounted in the price that he was going to do that. The US economy, even without stimulus, will take a good while to slow up. If you look at the data, it's pretty solid. It'll take a good while. And even if it does slow up, it's going to be in far better shape than Eurozone. So fundamental sentiment behind the chart, longer term, bearish for the euro. Now let's have a look at the chart. Obviously, despite the optimism about the euro, it has come down, but we've had a decent rally last week. Okay, now we come down, we slice the 20-day moving average, test it, can't get through, test it, can't get through. Here we go through. That was that weekly reversal we saw. Down, snap the 113 level. Okay, then we reverse back up and slice the 20. Okay, so I draw trajectory. Okay, so that's a trajectory which we've sliced, and it lines up obviously with the 20-day moving average. Now, from our position, we have got a position in at 115.55, which is unchanged since our last video. I put the stop at 114.45, just behind these candles here. Okay, I think we settle at 114.17. So if we come back, obviously we're going to be safe, so to speak. We'll get 110 pips profit, which would be disappointing. Okay, especially as it looked like we've broken down quite nicely. However, if we're stopped out, we can come back in again. Now, in terms of, let's just take if it breaks lower for fresh positions. Okay, so if we break lower, I would basically say, if you come in fresh, I put my stop back behind 115. Okay, keep in mind ours is 114.45 because there is some cushion of profit. Okay, if you come through 113.65, 115.45, yeah, if you look at the weekly chart, if this move breaks down, there's a long way to go on the downside. Okay, so it would offer a very attractive risk to reward, and yeah, like I've said, with the euro, you want to stay outside of the noise. Now, what if we push on up to 115? I'd be looking to sell any weakness up here whatsoever off the number. Now, obviously, I can't do it because I don't know what's going to happen, but you'd want weakness off the number. So we got to 115. It'd probably be away from round number at 114.75, something like that. Where would you put your stop? Again, I'd be one round number back behind 116, so something like 116.35. So, yeah, my own view is if she rallies on up, then she's a sell on weakness. If she falls back through the 20-day moving average away from the 114 round number, she's a sell. I wouldn't wait to come back through 113 again or anything like that. I would just do the levels that I've just said. I think, yeah, if you look at the big picture, and that's what I've got my eye on here, I'm not interested in the shorter term moves, so to speak. I'm not trying to grab those. I want the big trend, and yeah, I just feel a lot of downside in the euro, so that is the way I'm going to play it. So yeah, so I really like the look longer term of euro USD short, and we shall see what happens with this trading. Obviously, follow it daily in the member center. If we do leap up towards the 115 level, if I've got time, I'll come back and do another video. In terms of if that price action occurs. Okay, right, that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.